to me, is 62,000 a reason to turn bearish on Bitcoin? I mean, if you're trading it, yeah, but Bitcoin was $1,000, well, $100 10 years ago.
Mm-hmm.
So, 60,000 is still a fantastic return. And I think Bitcoin's usefulness is still improving. I don't think it moves. It's still a risk on asset. So I don't expect it to do well if the market is being hit by tariffs. Like, it's not immune to that kind of turbulence. But is the trust around Bitcoin going to grow over the next 5 years? Yes. And is it going to be increasingly viewed as a store of value like gold? Yes, I think increasingly. And then is there room for a lot more people to own it? Yes. So I'm not really bearish on it, but I think in the near term, it's hard to say it should go up right now.
Tom Lee, the renowned finance expert, has just revealed that Bitcoin is on the brink of a game-changing surge that will astonish the world. When asked about Bitcoin's current price, Lee remained unfazed by the doubts surrounding it. He firmly believes that, despite the fluctuations, Bitcoin remains an incredible success for anyone holding it, especially considering its remarkable growth over the past decade. While Bitcoin's value can be impacted by market sentiment and external factors like tariffs, Lee is steadfast in his conviction that its long-term potential is enormous. He's not just talking about gradual growth. He's predicting an explosive future for Bitcoin, where it becomes a gold-like store of value, drawing in millions of new buyers. Looking ahead 5 years, Lee forecasts that Bitcoin's trust factor will skyrocket, driving its acceptance and value to levels that might seem almost unimaginable. While short-term volatility could cause some hesitation, Lee is confident that Bitcoin will power through every challenge, emerging stronger than ever. Have you ever wondered who the crypto advisor must be for the biggest names in the online business space, such as Aman Godzi, Andrew Tate, and Luke Belmar? Well, there's one crypto investor who was the consultant for all of them, and he actually shares the systems he gave these influencers to make them millions on his YouTube channel for free, growing an 8 million portfolio by the age of 25. Daniel McAvoy is one of the best crypto investors you'll find online, specializing in long-term investments and meme coin investing. His YouTube channel is packed with incredibly valuable videos that will help you make life-changing wealth from crypto. Start watching one of the greats today, link in the description of this video.
The best strategy for our clients that we've recommended is you just want to be a long-term holder. But most people don't approach crypto that way. Most are trading it and want instant return. The work by our technical strategist, Mark Newton, so he thinks Solana, Ethereum, and Bitcoin all have downside. He has been bearish since mid-January. So I think it's been correct. And his downside target for Bitcoin is 62,000 by the end of March. But to me, is 62,000 a reason to turn bearish on Bitcoin? I mean, if you're trading it, yeah, but, Bitcoin was $1,000, well, $100 10 years ago. So, 60,000 is still a fantastic return. And I think Bitcoin's usefulness is still improving. I don't think it moves. It's still a risk on asset. So I don't expect it to do well if the market is being hit by tariffs. Like, it's not immune to that kind of turbulence. But is the trust around Bitcoin going to grow over the next 5 years? Yes. And is it going to be increasingly viewed as a store of value like gold? Yes, I think increasingly. And then is there room for a lot more people to own it? Yes. So I'm not really bearish on it, but I think in the near term, it's hard to say it should go up right now.
Generally, how are you thinking about the stock market?
I mean, the market is trying to price in a lot of these uncertainties right now. And so it's understandable that we're churning, but investors don't want to become too bearish because the market sentiment, and it's already measurable, like the AAII survey, which is what we've used for the last 14 years. I think it's the best retail sentiment survey, is at the same bearish levels it was in the fall of 2022. So retail sentiment, and that's probably because there's been a ton of margin calls last couple weeks, is at the levels that were at the depths of that recent bear market. So the investors view this as a crisis when it's really a growth scare. So to me, I think there's a good chance we're making our lows for the first half, like this week. And
like down 5-6%, you mean?
Yeah, it could be.
Yeah.
I mean, the only thing is I'm not that optimistic about the job picture for the near term. So maybe that's one last leg. But the reality is that a lot of bad news has gotten priced in. And, on the flip side of this is that the closer we get to stall speed, the more the Fed has to get off neutral. And I think the White House will have to back off talk of things that could be hurting the economy. I think that July to August was like essentially, I would say Fed driven.
Yeah.
And so like that makes sense because it felt like either the Fed made a policy error or the Fed turned hawkish.
Right.
But either way, we had a big drawdown. Will that happen this year? I mean, yeah, I think it'll happen. If I'm guessing, it's more in the second half. So I think this is just a flesh wound right now, not the source of a drawdown.
Okay, so flesh wound, like how much upside do you think if we get a lot of those headwinds kind of out of the way, a lot of those uncertainties we just talked about? Let's say we get the base case on that kind of pro-growth agenda that a lot of folks were excited about.
Let me be clear why I don't think it's 10%. Because let's say that some policies implemented that would cause the U.S. stock market to go down 10.
Yeah.
I'll guarantee you the rest of the world's down 30.
Right.
So will Europe and Canada, Mexico dig in and like, oh, we'll just power through this? No, they're going to capitulate. So the reality is that this brinksmanship probably means the other side caves in.
Tom Lee advises his clients to invest in cryptocurrencies for the long term, although most traders are focused on short-term profits. Since mid-January, Mark Newton, Lee's technical strategist, has held a pessimistic view on Bitcoin, Ethereum, and Solana, predicting that Bitcoin's price will fall to $62,000 by the end of March. According to Lee, the current retail sentiment mirrors that of the 2012 bear market, suggesting that investor mood has turned overly pessimistic. Despite his concerns about near-term employment prospects, Lee believes the market has already priced in much of the negative news. He also feels that as the economy nears a stall, the Federal Reserve will be forced to adjust its policy. Let's dive into more insights from his interview.
Is trade and tariffs, is this one of the biggest kind of headwinds, do you think, to the economy and the markets right now?
It has a potential to become a headwind. I mean, the reality is that if policies are enacted that create such a severe shock because of tariffs, then we could have a recession, right? I mean, that's like a fact. Because I mean, if you put a 300% tariff or something, we don't really know how to titrate that number. And that's why investors are nervous. But it's at the same time, the tariffs are accomplishing the administration's goals. Because if I was the White House, I know that I have some opposing risk from the Fed today because the Fed's hawkishly paused. Well, if the tariffs are causing confidence to fall and business activity is slow, then the Fed has to get off neutral. But then everyone's playing a dangerous game because, as you know, you don't want to get stall speed in the economy, because the day the economy gets to stall speed, we open up the uncertainty of a recession, because, you know, a shallow recession, I mean, a recession is unknown once it starts. I'm going to say, I think the Feds, in terms of guessing their thinking, I think they view tariffs as an inflation risk, and that's governing their actions. But it's evident now that tariff risk is actually deflationary, because it's sapping consumer confidence, and consumers don't actually have wallet share to pay for higher prices. So it's going to create a demand decline, which is recessionary. So I would guess that the Fed's thinking around this is going to evolve this year, that tariffs are probably deflationary, and therefore the Fed doesn't have to be hawkishly paused. I think consumers are happy when markets are going up and when gasoline's cheap, you know, and then probably when grocery store bills aren't going up. So stock market hasn't gone up. It's kind of flat for the last 6 months, and, you know, gasoline's not super cheap. And then, you know, as you know, it's not like it's gotten cheaper to go to the grocery store. So I think that there might be an intangible, like, those who voted for change politically, their confidence has gone up. But then for those who like the previous political party, they have no reason to be cheering, right? So it's kind of messy to expect consumer confidence to be good. But, you know, I think another thing to keep in mind is, like, when economists talk about Canada and Mexico tariffs, they're expecting Mexico and Canada to go into a recession. So it's kind of weird for someone to think that the U.S. should have accelerated growth or inflation. To me, one of the, I think, sleeper winners from all of this is going to be the financials, because they've underperformed the last 15 years. So they really have not caught a break since the GFC. And finally, an environment that is better for the banks, and AI is actually good for business. And JP Morgan and all these banks show they made money through inverted curves, hyperinflation, tightest Fed ever, and now you have all this reversing. Another group that I think makes sense is digital assets. I do think so. Bitcoin is down, but it's our clients. It's actually not a surprise to our clients because Mark Newton, our head of technical strategy, really pointed out the cycles in mid-January that he was targeting 62,000 for Bitcoin by the end of March. So we're actually on our way to 62, but that's not a bearish development. It's just a retracement. And the third, of course, is small caps, because once the tariff talks go away, the environment is favorable for American-focused companies, which would be small companies, and they'll benefit from lower rates and their multiples are lower. So I think it's still a big opportunity. But in the middle of tariff talks, none of these groups can really do that well.
In Tom Lee's view, trade and tariffs pose significant challenges to both the market and the economy, with tariffs potentially triggering a recession by causing major disruptions. While tariffs may help the administration achieve its objectives, Lee highlights the trade-off of declining consumer confidence and slower business activity. As a result, the Federal Reserve might be forced to reconsider its neutral stance and adopt a less hawkish approach. The impact of tariffs on inflation is also under scrutiny, as the Fed initially believed they would drive inflation, but it is now clear they have the opposite effect, weakening consumer confidence and reducing demand. Despite these challenges, certain industries, like financials, could present opportunities in this unpredictable environment. For example, financial stocks may benefit after years of underperformance. Additionally, digital assets like Bitcoin remain a sector to watch, especially as Mark Newton, Lee's technical strategist, forecasts Bitcoin to fall to $62,000 by the end of March. In other news, U.S. President Donald Trump has announced plans to establish a strategic cryptocurrency reserve, positioning the U.S. as the crypto capital of the world. This reserve will include Bitcoin, Ethereum, XRP, Solana, and Cardano, signaling a significant shift from the previous administration's stance on cryptocurrencies. Following the announcement, the market responded positively, with the value of these cryptocurrencies rising. Trump plans to host a crypto summit at the White House to provide more details, and additional crypto regulations may be proposed by the Presidential Working Group, potentially fostering a more favorable regulatory environment. What impact do you think this move will have on the U.S. economy? Share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.